Did you know that one Beatles song literally changed tax law forever? What if I told you that your favorite Marvel superhero exists because of a comic book tax loophole? And here's the kicker. There's actually a government form that determines whether your Netflix binge counts as a business expense. Welcome to the wild world where taxes meet pop culture. And trust me, it's way more entertaining than your accountant would have you believe. I'm about to blow your mind with 10 incredible ways that taxes have secretly shaped the entertainment we love, the celebrities we obsess over, and even the streaming services we can't live without. From rock stars fleeing countries to avoid massive tax bills to movie studios literally moving productions because of tax incentives, this connection runs deeper than you might imagine. Let's start with something that'll make you see the Beatles completely differently. Back in the swinging 60s, Britain had what they called a super tax, a brutal 90% tax rate on high earners. Yeah, you heard that right, 90%. The Beatles were making astronomical amounts of money, but the government was taking almost all of it. This led to their famous song Taxman, where George Harrison literally sang about the absurdity of working for the tax collector. But here's where it gets really interesting. The public outcry from this song and similar complaints from other high-profile celebrities actually contributed to tax reform in the UK. One song didn't just climb the charts, it helped change legislation. But the Beatles weren't the only ones feeling the tax squeeze. The entire British music invasion of the 70s was partially fueled by tax exodus. The Rolling Stones recorded Exile on Main Street, while literally in tax exile in France. Led Zeppelin spent years as tax exiles, and bands like The Who had to carefully plan their touring schedules around residency requirements to avoid crushing tax obligations. These weren't artistic choices. They were financial survival strategies that ended up creating some of the most iconic albums in rock history. Now let's dive into Hollywood, where taxes don't just influence where movies get made, they determine what movies get made at all. Ever wonder why so many blockbusters are suddenly being filmed in Georgia, Louisiana, or Canada? It's not for the scenic beauty. It's all about tax incentives. States and countries offer massive tax breaks to production companies, sometimes covering 30 to 40% of production costs. This has completely reshaped the film industry landscape. Marvel's entire cinematic universe owes part of its existence to strategic tax planning. Disney structured their Marvel acquisition partly to take advantage of various international tax treaties and incentives. When you're dealing with billion-dollar franchises, even small percentage differences in tax rates can mean hundreds of millions in savings. Those savings get reinvested into bigger budgets, better special effects, and more ambitious storylines. Here's something that'll surprise you about streaming services. They've created entirely new categories of tax complications. Netflix, Amazon Prime, and other platforms have to navigate different tax laws in every country they operate. But they've also created new opportunities for content creators. That YouTube channel you run as a hobby? Depending on how you structure it, your equipment purchases, your internet bills, even your coffee shop meetings for collaboration can become legitimate business expenses. The music industry has been completely transformed by digital taxation issues. When Spotify pays an artist, that money gets taxed differently, depending on whether it's considered a performance royalty, a mechanical royalty, or streaming revenue. Artists now need tax attorneys just to understand how their streaming income gets categorized. This has led to some musicians restructuring their entire business models, forming LLCs, and even relocating to different states with more favorable tax treatment for intellectual property. Speaking of intellectual property, here's a mind-blowing connection. Comic book characters have been used as tax shelters. Seriously. Wealthy investors have purchased rights to comic book characters and claimed depreciation on their value over time, treating them like any other business asset. This got so out of hand that the IRS had to create specific rules about how fictional characters can be valued and depreciated. Your childhood superheroes became inadvertent tax planning tools. Celebrity endorsements exist in their current form largely because of tax law. When a celebrity gets paid millions to appear in a commercial, the structure of that deal, whether it's considered performance income, licensing fees, or appearance fees, dramatically affects their tax liability. This is why you see celebrities creating their own production companies or licensing deals rather than just taking straight appearance fees. Taylor Swift doesn't just perform, she licenses her image and music through carefully structured business entities designed for tax efficiency. The rise of influencer culture has created an entirely new category of tax complexity. Instagram influencers, TikTok stars, and YouTube creators are basically running small media companies, but most started as hobbyists who suddenly found themselves dealing with business tax obligations. The IRS has had to develop new guidelines for everything from free products received for reviews to revenue sharing from social media platforms. Your favorite influencer's ring light isn't just a creative tool, it's probably a tax-deductible business expense. Here's where things get really fascinating. International tax treaties have shaped what entertainment content gets produced and distributed globally. Netflix's decision to produce original content in specific countries isn't just about creative diversity. It's about taking advantage of local tax incentives and international treaty structures. When you watch a Netflix original series set in Spain or South Korea, you're watching the result of complex tax optimization strategies. The gaming industry represents perhaps the most complex intersection of taxes and pop culture today. Video game companies deal with tax issues across multiple jurisdictions: digital asset taxation, virtual currency regulations, and intellectual property licensing fees. When you buy a skin in Fortnite, that transaction triggers tax calculations across multiple countries and business entities. The rise of esports has created professional athletes who compete in different states and countries, creating nightmarish tax situations that require specialized accounting. Concert tours have evolved into massive tax planning exercises. When a major artist goes on world tour, they're not just planning performances, they're optimizing tax efficiency across dozens of countries with different tax treaties, withholding requirements, and reporting obligations. The routing of major tours often prioritizes tax-friendly jurisdictions over audience demand. That's why some artists play multiple nights in certain cities while skipping others entirely. It's not always about ticket sales. Even award shows have tax implications that influence how they operate. The Oscars, Emmys, and Grammys have to carefully structure their operations to maintain tax-exempt status while generating massive revenue from broadcasting rights and sponsorship deals. The gift bags that celebrities receive at these events, those are considered taxable income, and recipients are supposed to report their value to the IRS. What's truly remarkable is how these tax considerations have become so embedded in entertainment industry decision-making that they're invisible to consumers. Every Netflix show you binge, every concert you attend, every video game you play has been shaped by tax strategy decisions made by accountants and lawyers you'll never see. The next time you're watching your favorite show or listening to your favorite artist, remember that behind every creative decision, there's probably a spreadsheet calculating tax implications. Pop culture and taxes aren't just connected. They're inseparable dance partners in the grand performance of modern entertainment business. This invisible influence of tax policy on our cultural landscape continues evolving as new technologies emerge, and tax laws struggle to keep pace with digital innovation. Who knows what fascinating connections we'll discover as virtual reality, blockchain technology, and artificial intelligence create new intersections between taxes and the entertainment that defines our lives.